Hey traders, I want to go over the PDT rule. This is going to be a video not only for novice traders, it's going to be a video for some experienced traders as well, because I'm just going to briefly touch on what the PDT rule is. Then I'm going to talk more about how to avoid it, different ways to avoid it, and things that I struggled with the last few years. These are merely my thoughts and opinions on the matter. I'm not trying to advise you in any way, but I think this video is going to be really beneficial to you. Hope you enjoy. Let's go ahead and define what the PDT rule is for the new traders. This is a pattern day trader rule. And what it is with your brokerage firm in the United States, the SEC has governed this rule over you so that you can only execute 4 or more day trades within a 5 business day period. Why did they do this? They did this because a good little while back, I think 30, 40, 50 years ago, a lot of people were blowing up their accounts. They were opening up their accounts to day trade. What they were doing was revenge trading. Everyone was revenge trading, and so the SEC said, okay, enough of that. We want to keep your money for more than 3 days. And so what they did was they placed this PDT rule out there, so you can only have 3 trades a week. That is day trades, intraday trades, and we'll go over that in the next slide. I want to go over things that confuse me a little bit. These are things that I couldn't really wrap my head around at the beginning. So I want to go over exactly what an intraday trade is. If you buy 1,000 shares, this is an example. If you buy 1,000 shares and you sell 500 and another 500 all within the same day, that's only going to count as one trade. So that is an intraday trade. Because you scale out doesn't necessarily mean you've closed your position. So an intraday trade is fully opening and closing a position in the same day. A lot of people, to avoid the PDT rule, is that they'll swing trade. I'm not a swing trader. I don't like that. But you can buy 1,000 shares one day and then sell 1,000 shares the next day, and that will not count towards your 3 day trades for the 5 business day period. Another example is you cannot buy 1,000 shares, buy another 1,000 shares, and then sell 2,000 shares intraday. You can only scale out from the first example. So if you buy 1,000, you can scale out 500 and sell another 500, because that's opening and closing one trade. And I have message support about this because I was confused about this at first too. The reason you cannot do this is because you're not only opening one position and closing on that. What you're doing is opening up 2 intraday trades and closing on both of those. That will count as 2 day trades. Now, if you have 2 day trades or 3 left, then that's fine. You can do that, but just know that one intraday trade is buying one position and selling that one position, whether in half or in full. You're opening and closing one position entirely. Those are a few pointers I wanted to give about the PDT rule. If anybody has any questions about that in more detail, I'll go over that. But really what I want to focus on is how to avoid the PDT rule, because this really stumps a lot of people. How to avoid it. There's 3 different ways that I want to talk about on how to avoid it. These 3 are the main I want to focus on. I've seen traders really use these to their benefit. The first one is don't have a margin account, have a cash account. Now, having a margin account with your brokerage allows you leverage, but you don't necessarily need that, especially if you have a good amount of capital already in that brokerage firm. So, for instance, if you have 10 or 15 or 20,000 in your account, but you haven't quite yet made it to that 25K mark, that's okay. You don't necessarily have to switch to an offshore broker with some of that money or all of that money, because what you can do is switch from a margin to a cash. And what this will allow you to do is you'll be out of the PDT rule, so you will no longer be under that, because you're not trading with the brokerage's money. You're trading now just with your cash. And the T+1 that I have down here means trading day plus 1. So what that means is, let's say you have $10,000 in your cash account, and you trade that full $10,000 on Monday. Well, T+1 means it's going to take trading day, the day you made the trade, plus 1 day to get your funds back. So if you trade on Monday, your funds will be processed and back in your account on Wednesday. Now, the reason I say you can avoid the PDT rule with this is you don't have to necessarily trade with all $10,000 or $15,000 on Monday. What you can do is split it up. So you can trade with $7,000, $8,000, or $9,000 on Monday, and then trade with $7,000, $8,000 on Tuesday, and then you're getting that same amount, that equivalent amount every single day back. Because if you trade $7,000, let's say you have a $15,000 account, if you trade $7,500 on Monday and trade $7,500 on Tuesday, then you're getting back what you traded Monday on Wednesday, and you're getting back what you traded on Tuesday on Thursday. And so a cash account allows you to do this. Granted, you cannot trade with leverage, but you know, that's something you'll just have to think about if you really want to use leverage or not. Another way I've seen traders get around the PDT rule is they'll open up several brokerage accounts. They will not only have a brokerage account with TD Ameritrade, they'll have a brokerage account with E-Trade and Centerpoint and Speed Trader and Interactive Broker. This all depends on the capital you have. If you have $15,000, then yeah, you know, go for it. Open up an account with 3 or 4,000 here, 3 or 4,000 there, 3 or 4,000 there, because that way you're going to have 3-day trades every 5 consecutive business days at many different brokerage firms, which is going to allow you maybe up to 15 trades a week. If you don't have that kind of capital, though, I would suggest going offshore, and that's what I've recently done. I was with TD Ameritrade for a while, but I was only getting 3 trades every week, and I ended up going to CMEG. I'm at Capital Market Elite Group now, and I can trade as much as I want to. I really only recommend going offshore if you have experience trading, because of course there's a whole new set of emotions that you're going to encounter and you're going to need to be prepared for. You can blow up your account. But really what I would recommend is if you do have around the $10 to $15 to $20,000 amount of cash, you know, I think going with a cash account and doing the T+1 is really beneficial for you, because that T+1 when I first started trading was actually T+2. So it means if you trade Monday, it'd be processed and you get it back Thursday. So T+1 is pretty good. So I would recommend that for mid-range accounts about halfway to the 25K mark. Or if you have around that balance as well, doing several brokerage accounts. I'll really only recommend going offshore if you do have less than $10,000 in your account. And you can of course grow your account in a number of ways. Really any of these ways. It's all on how you trade and what works best for you. I wanted to make this quick point really fast too, because some of you are really stressed about growing to that 25K mark so you can get as many trades as you want with United States Broker. I'm with CMEG now, and you know, I used to be desiring to get to that 25K mark as quickly as I could, so that I could, you know, trade in the United States. But at this point, really, I'm very happy with CMEG, and my commissions are $295. I don't know why I would want to go back, honestly. So I'm not even stressed about getting to the 25K mark. So just find the broker that fits you, that's right for you, and you guys will be fine. I wanted to create this video really just to help people out who don't quite understand the PDT rule, and also those who don't really understand what's the next step for them, and just go over a few options for them. But I hope this video was helpful for you. If you have any other questions, just leave them down in the comments section and I'll get back to them. Thanks, guys.